Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Pachurdiz, and joining me is lead investment analyst Rafi Boyadjian. We'll be reviewing the week ahead. So Rafi, let's begin in Europe, where ECB policymakers are facing a huge dilemma given the ongoing war in the Ukraine. Could you shed some light on the ECB situation and what it's likely to do when it meets on Thursday?
Well, Maria, indeed, this is going to be quite an important meeting for the ECB because it was only back in December when they had set out how they're going to exit their long-running asset purchase program. In fact, the plans at the time were that they could maintain their regular asset purchase program well beyond the end of the pandemic, the end of the pandemic purchase program, and could possibly run into 2023. But expectations were that they probably were going to end it at the end of 2022 anyhow, even before, mainly because of inflation had started to creep higher in the euro area. Now, of course, the inflation has surged a lot more since December when those plans were made. And at the January meeting, we got some sense from Christine Lagarde, of course, president of the ECB, that they could in fact end their QE program either at the end of 2022 or perhaps even sooner, because that would then pave the way for the ECB to start raising interest rates. Now, though, with the Ukraine crisis coming into the picture, everything's looking very uncertain again, because although this crisis does worsen the inflation problem, it does also pose a significant risk to growth for Europe and specifically for the euro area. So some policymakers have started to turn more cautious. Even some of the more hawkish voices are expressing some doubt about whether or not they can quickly end their asset purchase program. But nevertheless, the inflation is becoming a serious problem, and they need to do something, even if it's not going to be as aggressive as what some other central banks are doing. So most likely, they will announce an end of their QE program either at the end of Q3 or at the end of Q4. Now, the thing is that if they do wait until the end of Q4 to end their stimulus, they won't be able to raise the interest rates until early parts of 2023, and that would put them well behind of other central banks. So that could worsen the euro's problems. Of course, the euro still sliding on the back of the war in Ukraine. So I guess you could say that the risks are mainly to the downside for the euro from the ECB meeting.
Like the euro, the British pound has also taken a hit due to the current geopolitical crisis. Do you think the UK data due out on Friday might trigger a reaction or affect the Bank of England's policy path?
Well, so like I said, there are some similarities between the euro and pound, and of course the Bank of England and ECB in the sense that they're both trying to normalize this policy, and the Bank of England is, of course, well ahead of the ECB in terms of where it is, in terms of normalizing policy, ending stimulus, and raising interest rates. We already had 2 rate hikes by the Bank of England, and we're likely to get another one at the March meeting later in the month. But the data normally probably would have been significant for sterling. We do have quite a few data coming out in GDP, industrial production, trade numbers as well. But because we don't quite know yet just how much of an impact this crisis is going to have on central bank policy, I think there's some certainty, although the bank will definitely raise rates in March. We don't quite know what's going to happen after that, because if this crisis does seriously start to weigh on growth, then the Bank of England might not have to raise rates as many times as they were planning to. So I think the data will probably be overlooked, and the sterling will probably be taking its cues from the broader market mood, particularly the Ukraine headlines.
Moving over to the US, the CPI report for February is due on Thursday. What are we expecting to see there, and how might the dollar be affected?
Well, we're probably going to see another big jump in US inflation. Of course, inflation in the US had risen to well above 7%, and it's now approaching 8%. So forecasts are that's going to rise from 7.5 to 7.8% in February. And again, although we, like the Bank of England, we do have certainty about the March meetings, so the Fed will probably raise rates by 25 basis points. We got a strong signal of that from Fed Chair Jerome Powell when he was testifying before lawmakers in the past few days. But beyond that, it's all going to come down to what's going to happen to inflation, what's going to happen to the war in Ukraine. The data, even if we were to get a big upside shock once again, we might not see that huge initial reaction as before, because of course it's the huge uncertainty in the more medium-term picture. The dollar, on the other hand, because it's being boosted by safe haven demand, it will probably still remain quite elevated. If not, it doesn't even manage to make fresh highs. I think that's as much of a factor for the dollar as the Fed policy, at least in the short term.
And finally, in Canada, the loonie hasn't really been able to benefit much from the rally in oil prices. Can next week's employment report provide a boost?
Well, we could see that because, of course, employment did drop sharply back in January because of some restrictions due to the Omicron wave that was really surging across Canada. Now a lot of those restrictions have been removed, and we should get a decent bounce back in February, and that could boost the loonie because the Bank of Canada so far has signaled that Ukraine crisis it's not going to really derail their plans to raise rates multiple times this year. We've got, of course, the first rate hike by the Bank of Canada in this past week. And because the Bank of Canada didn't really, although they are worried about the Ukraine war, they didn't at this point say that it might stop them from raising rates. So we saw the loonie getting a bit of a lift, and we could see additional gains should we get very strong numbers next week.
Rafi, thanks so much. And thanks for joining us at XM.com for this weekly outlook.